How is it going, everyone? It is John here. Do videos on investing and some other things as well. Anything to do with investing like ROI, also some real estate and some short-term rentals, medium-term rentals, vacation rentals, stuff like that. I have not been on for a while. We are in the midst, in terms of the stock market, of certainly, as you can see, a post-pandemic crash, bear market, whatever you want to call it. I'm not getting into the specifics of the technical definition of a bear market, but it's certainly been brutal. Here we are. It is June, right? On the first day of June here in 2022, and it has been an absolutely brutal year, certainly for the growth stocks that I focus on. But what am I going to talk about today? I'm actually taking a look at the biggest tech stocks, right? I'm going to take a look, I'm going to show you some analysis I've done on Amazon, on Apple, on Facebook, Netflix, Google, and Microsoft as well. And I also have a little clip from Jim Cramer, because Jim Cramer actually says that Amazon, Facebook, and Google have nowhere to go but up, and he has been certainly very bearish for a while. I think the end of 21 and then also here all year 2022, Jim Cramer has been pretty bearish. But basically, you're going to show you that clip. But yeah, what I like to do, everybody, is I like to go in and I take a look at revenues. In each case, I'm going to do the trailing 12-month revenues. I really do prefer to look at the full calendar year when they do their fiscal year. But what we have really today is we have the trailing 12 months in each case. I also look at gross profits, what their gross margin is, their year-over-year revenue growth rate, and then I look at what my favorite in terms of understanding the value at a time like now is what is the gross profit number compared to the market cap. And we can see that pretty much Facebook and Netflix are going to be the lowest if you're interested in those. So everybody, let's go in. We're going to take a look at the handy dandy spreadsheet here and take a look at some of these, and then we'll take it from there, okay? All right, so as you can see, we have right here, yeah, that's probably the best. Let's see. So, we have here, what I've done is actually sort these companies by most recent 12-month revenues, right? And then at the top of the pack is Amazon. Certainly their revenues are climbing, and then right here that we got as you can imagine, Apple, Alphabet, Microsoft, Facebook right behind Microsoft. And everybody, this group isn't really that small, right? I go all the way down, following a lot of really small growth stocks. I've done about 60, what is that, 63 companies. So basically, yeah, so Facebook's even got more revenue than Chevron and Costco these days, and almost twice as much revenue as Disney. Isn't that crazy? Facebook has got almost twice as much revenue as Disney. So anyway, so if you take a look at it, and again, this is just done today. So this is as of the most recent earnings releases, which were within the last, let's say, a lot of companies releasing their earnings in, let's say, April and May, right? So so let's take a look at the actual. I don't know if you can see it with my. There we go. Okay, so here is the market cap to gross profits, right? So here's basically the market capitalization figure, and as you can see. Facebook is actually even a little bit lower than Netflix, and Netflix has certainly been really crushed over this time frame. But as you can see, basically what this means is 5. So the actual gross profits, the most recently reported gross profits for Facebook, is about 96, so really close to 100 billion, and then their current market cap is about 500 billion. Obviously, a lot lower than it's been for quite a while. I'll also take you into Yahoo Finance, so you can actually see what the 52-week high is there of Facebook. And then we've got Alphabet there at 9, and then Netflix at 6. So looking at this, if you feel comfortable, I mean, I think Facebook has gotten hit pretty bad too because of everything in the news with them in terms of everything related to what they do with privacy and the third-party cookies and everything like that. So they still might have a hard time on Wall Street because of what's kind of going on with their reputation with privacy. But in any case, they still have it. They still have, really high revenues, really high gross. Look at their gross profit margin is 80%. Year-over-year revenue growth rate still at 39.2. Even, Alphabet, they're at 48%. Apple, of all these, Google hasn't really been hit that hard. And oddly enough, Microsoft really didn't get hit much at all. So let's go ahead and we're going to take a look at how their stocks, some of their stocks have done in terms of how much they've gone down this year. All right, so here's some of the graphs here. So as you can see, the 52-week high for Google for parent company Alphabet is 3042. So at 2284 right now, they're about 75%. So they've come down 25% since their 52-week high. Let's take a look. As obviously Facebook is gotten hit a lot more. Sorry, Facebook now goes by Meta, and apparently in a couple days their symbol is going to be Meta, so they're going to start trading as Meta. So if we take a look, their 52-week high, here at their 52-week high is 384.33. I mean, that is 384.33. So basically, they're down, 50%. They might even be down more than that since the beginning of the year, but they're down about 50% from their 52-week high. The next one is Amazon, everybody. So, as you can see, actually from let's see the handy dandy spreadsheet. So we've got Amazon's probably the highest in the group where their market cap, because their most recently reported gross profits weren't that great. Only a gross profit margin of about 13.4%. So their market cap to gross profits is about 19. So the highest in the group of everyone that of the big companies that I selected here, because we've been hit so hard. But nonetheless, I've actually got a really probably too big of a position in Amazon myself. But if you take a look at their 52-week high, compared to where we're at now, it is about it's about 64%. So, pretty much there, about 35. So Amazon's off of its 52-week high by about 35%. Interesting, exciting news about Amazon. They're going to split their shares a lot, come July, which is actually something I'm waiting for because, historically, summer tends to be a pretty good season for stocks. Next one, everybody, here is Netflix, and my positions have just gotten hammered on Netflix. I am, if you saw from some other videos, I am an early investor in Netflix. I started buying Netflix back in 2011 and 12 when their market cap was about $3 billion. So Netflix was my only, so far, my only 100x return, writing that up, and it has been absolutely crushed. I think it's down about 70+% from its 52-week high. But if you take a look at where it's at now at 192 and a market cap of not even 100 billion. So basically it was at a 300 billion market cap when I hit my 100x return, which was moons ago at this point. But again, I've certainly trimmed those positions and don't had sold quite a few times Netflix over the years. Always held on to quite a bit, but still definitely sold some over the years, and even sold some to do other projects as well. Really exciting things in real estate. But if you take a look at their 52-week high, which is 700. Wow, that's amazing. Right now we are only 27.5% of the 52-week high, so we are basically 73% off at Netflix of the 52-week high. That is just shocking. And if you take a look at their numbers are still going up. I mean, they're so nowhere near as high of revenues, right? As Facebook and other group where they're way over 100 billion in revenues. But Netflix is still there at 30 billion in revenues, just right there next to Tesla in their revenues. And they've always steadily climbed. Basically the 12 months prior was 24.99, so basically 25, and then the 12 months prior to that was about 20. So they are growing nicely. Here you see 21.63 year-over-year revenue growth. They have attractive gross profits at 41%. So, very, very nice business, but they are, certainly way off, and they probably, hold the title as the most hit. The bigger groups here, certainly in FAANG, during this post pandemic crash, right? So there you have it for Netflix. Everybody, pretty much Microsoft and Apple haven't really done that much. They've come down a little bit. As you can see, their market cap to gross profits are, certainly higher than, let's say, Facebook and Netflix, certainly about 3 times higher, but they haven't really changed that much. There's been periods where Apple's come down a little bit, but I think Microsoft, oddly enough, is a little bit higher. So we're not going to take a look at those, stocks. But let's go ahead and we'll show you the little clip here from Jim Cramer and what he has to say.
All right, guys, listen. I'm trying to describe Google, a world where some of our favorite stocks
Amazon,
have been crushed. Amazon, Facebook, and Google, now Facebook, by the way, is Meta, became big losers. And while they may stay losers, I think they've fallen so far that they've become metaphors for a whole host of stocks that can rally because they've got nowhere else to go but up. Well, man, buddy, tonight, Salesforce poured into the bill. So what could the Cloud King tell us about the state of tech amid the recent crunch? Let's talk to the CEO. Then Larry Williams has an impressive track record with his technical analysis. I'm going off the chart to see if this market could have more.
So there you go, everybody. Straight from the mouth of Jim Cramer, who's been very, very bearish on growth tech and technology for quite a while. Let's say even since, I know since the beginning of this year, 2022, but also since the end of 2021. But I'm going to be doing, pretty much what any responsible investor would do, which is dollar cost average into really what I like is I've really wanted to get into more of Google. So I'm looking to get more into Alphabet. Certainly interested in Facebook. Have had a great ride on Netflix, so I'm not really sure about that just yet. But again, Netflix was my first and at this point only 100x return investment because I started buying Netflix, back in 2011 and 2012. When they're at a market cap of $3 billion, as I said before, but basically, yeah, they're down over 70% from their 52-week high. But basically, I am most interested actually, and I didn't include Tesla in that list, but I'm also very interested in actually getting some more exposure with respect to Tesla. So Tesla and Alphabet are the most interesting, have probably a little bit too much exposure there to Amazon, but Amazon, it's reported they're going to be splitting their shares actually in July, which is kind of what I've been waiting on because it's kind of hard to sell a stock that's, $3,000 a share, whatever it is now, $2,400 a share. But in any case, like I said, I'm going to be doing what is the most responsible thing, which is dollar cost averaging into the investments. So it should be an exciting summer. And usually summer is typically during, it's been a bull run here since 2009. So it's a long time bull run, right? But usually stocks tend to perform better in the summer. And then also the winter, right? So there you go. And I'm also going to be coming out with a lot more videos on real estate because here we are in the heavy duty busy season for, basically summer because it's, you can, depending on how you do it, you can make pretty much the most money from, let's say, May until some point in September, at least in Southern California here and also the Sun Belt here in the US, right? So I'm going to be doing a lot more videos on that. Everybody, just so you know, I do have a background in investing. First job out of college was Merrill Lynch. I did investment banking and also worked for Sun America here in Los Angeles. And I've also been investing in stocks since 1989, 1990. And like I said, I've got, a track record of a lot of 10Xs. And then also, bought Apple back right before the first iPhone came out. And then Netflix before its 70% crash was my first 100X return. Hopefully you guys like that. Let me know which of the big tech, what you're interested in getting in. If you're interested in Facebook and Netflix because they've come down so much. Also, look in the description area. You'll see some links to my programs. I've got programs on generating income online as well as different, investing programs. And then also I'm going to be coming out with soon some programs for real estate and everything related to short and medium term vacation rentals and just short-term rentals. Okay, everybody. Thank you very much. Have a great one.
Room to run. And fractional earnings, I'm getting the latest from the CEO of HP to see if the piece